All right, guys, I just saw a tweet that I wanted to react to. Now, before we go further, I want everybody to understand that we do attack a lot of YouTubers because we think there's a lot of charlatans out there. We think there's a lot of shady people who don't understand things. Now, Stephan, I like his personality. I think he comes across very nice, very kind. But he did write a tweet the other day that I have issue with. And again, this is not an attack on Stephan because he's just... I like his message at the end of it, which we're going to focus on here. So here's the tweet. The tweet is, right now is one of the best entry points the stock market has seen in the last 15 years. If you wished you could go back in time and invest in 2009, now would be that opportunity. But they're over, blah, blah. Here are top 5 that can make you rich. Now, I agree that he's probably talking about dollar cost in some fashion. Like, listen, don't be scared.
Yeah, he has to be saying something like that. And I think he's saying... I think he would be saying this at any time. You know what I mean?
Focus on this. If you wish you could go back in time and invest in 2009, my next question is, would you? Of course you would.
Yeah, of course you would.
But guys, the reason I want to talk about this is a good learning lesson. This is absolutely categorically 100% false. Right now is one of the best entry points. Now, let me draw my analogy I always draw. Let's say you own a home and it's worth $1 million. Okay? Like in a regular market, God comes down and says, your home is $1 million. So you sit there and say, you know what? Let me do something. I'm going to ask $4 million. Is that a reasonable price?
No.
Okay, it's not. But then you say, you know what I'm going to do? I'm going to discount it to $3 million.
Sounds better than 4.
Now it's a deal.
Yeah.
To me, this is what he's saying.
Yeah.
The value is still $1 million. A fool knows the price of everything and the value of nothing. This is a quote that's been juggled around a bit. What we need you to understand, and it's not to say stop investing. Right. What it means is understand what the future holds. Your job as an investor, what Mo and I do every day is we sit here and go, okay, what appeals to us out there in the investing world?
Exactly.
So Mo and I are always looking for what can we buy for as close to $1 million as we can that's worth $1 million or more.
Yep.
Right?
Yep.
So let me show you. So if you're new to our channel, guys, Mo and I are investors. The fundamental belief we have is we believe in value investing. Now, what was that? What were you going to say?
Buying a dollar for less than $1.
Buying a dollar for less than $1. Now, is that easy? No. Does it make sense? Of course it does. If a bridge builder, as Warren Buffett says, is building a bridge to hold 10,000 pounds, they don't build a bridge to hold 10,000 pounds. They build a bridge to hold 20,000 pounds. Margin of safety. We do the same thing with investing. Now, this is what I created, a stock market GDP ratio. The stock market GDP ratio is what Buffett considers the most reliable metric at any given time on valuations. But remember, in the short run, stocks are a
voting machine.
And in the long run, they're a
weighing machine.
That means that in the short run, what's popular will go up, what's unpopular will go down. Exactly. Look at the hype.
Yep.
Look at the tattooed chef, the Pelotons, the Palantir, the
Rivian,
Workhorse, Rivian, Nikola, Tesla. All these companies have fallen from grace because valuation didn't match and eventually it caught up. And in the long run, valuation will matter. Okay.
Valuation always catches up to price.
At some point. At some point. When? No clue. But the key here is this is our valuation of the market at any given time going back to 1929. We are currently sitting at a ratio of 1.544. Guess what? That means squat. Just in and of itself. But that's what Stephan is saying. Now, let's put it in perspective. What's the historical average? Well, the historical average is 0.929. So that takes us currently, how much overvalued? 66.2%. So when he says it's the best time, I'm going to sit there and say, well, according to valuations, right, Mo?
Yeah, according to valuations, it's one of the worst times.
Right.
You know?
And look at this, over the last 15 years. So let's go back to 2009. Let's start in 2010. Look at these. We were undervalued all the way over here. We were below, we were below 65% overvaluation until
keep going.
Right here, June of 2020. So literally from 2010 to March of 2020, stocks were at better valuations than they are today. Today is not the best time to do it.
No.
Now, Mo, go ahead.
I want to think that his message was, don't be afraid of getting into the market. That's what I hope his message is. That's what I think it is.
And you know why I believe that? Because he's talking about index funds.
Yes, exactly.
when you talk about
he's
index,
not saying go buy some high flyers out there like you hear from CNBC.
And I do think that Graham Stephan provides a lot of value for people who are getting into the world about saving and a way of thinking. I don't watch videos in general. Mo's watched some of his videos. We've never really seen a video of his where we go, good Lord. Now, he was a crypto fan. Is he still a crypto fan?
I have no idea. I know after the FTX thing, he came out and said some things. I'm not sure exactly how he apologized, or if he apologized, I don't know.
By the way, I don't think he should apologize.
It's just an endorsement, but...
And so I look at this saying, I want to teach people to understand valuation. If I told you to buy a car tomorrow and I said $300,000, what would you say to me? You should say to me, well,
how much is a car?
Well, what kind of car is it?
What kind of car is it? Yeah.
Right? $300,000. It's a Ford Tercel. Is it? No, Toyota Tercel.
Like, you're nuts.
Yeah. Okay, it's a Ferrari Enzo.
Okay, we can talk.
You should sell your soul to buy the Ferrari Enzo for $300,000 because it's all about value, not just the price you pay.
Right.
Price is what you pay. Value is what you get. And that's the big key here. So we're sitting here looking at this, and I saw this tweet. I sent it to Mo and Tim. I said, I really hope he didn't write this tweet. And they said he did. I'm like, listen, I want to react to this only to sit there and say, guys, I'm not saying discount what Graham Stephan says. I think it's a very good channel to get an idea and I read a bunch of things out there. I mean, I sit there and want to get ideas of what people are thinking because it helps me in my investing world.
Right.
Like, well, Mo, when you look at what people are saying out there, what's the reason you do it?
Why I look?
Yeah.
It's fun.
Well, it is fun.
It's fun. You might learn something new. Who knows?
Well, for me, I also want to see where's the market. Like, to me, if I still see all these things, like...
See, that's why you make a really good point. And I love talking to people about that stuff, too.
Do you see anybody talking about Tattooed Chef, Workhorse, Peloton, or any of these things?
So the only place that I see these being talked about is our community, and it's because, oh my God, look at how far that's gone down. This is barely in existence anymore.
All these stocks.
Down 90%.
All these stocks.
This was made of cardboards, and they rolled it down a hill.
I mean, that's the thing. By the way, the list is so long. And guess what, guys? The stocks I own are down. About 80% of them are down. Some of them are down a lot.
Caveat. The financials are behind them.
And that's the thing. When the financials are behind it to back it, I use it as an opportunity to focus on that voting machine. And when the stock has good cash flow, good fundamentals, and selling for a good valuation, I buy more.
You're never going to buy stocks at the lowest level.
And they could fall.
It's impossible.
And what did Warren Buffett say? If you can't stand your stock you buy falling 50% or more, don't buy it.
Go buy index funds.
Yeah, and you should.
And you'll be very happy.
And I do believe that for the vast majority of your money, I used to be 100% index funds. And then I started to dip into individual stocks. And now I'm either cash or individual stocks and options and reals. That's the point of it all. But I do believe, and again, Graham Stephan's built a wonderful channel. This is an inaccurate statement. Inaccurate. All he's saying is, in my opinion, he's saying stocks haven't fallen 15% or 20% in a long time.
Go buy them.
So therefore, go buy them. It's like, no, that's just understanding price. Yeah. And if you only believe in price, please call me. I have a few things in my house I need to get rid of, and I will gladly sell you because
I have something of Paul's in my house that I really need to get rid of.
It's $1 million, but I'll discount it to you for $5,000. And you'll be like, oh my God, it's a 99.5% discount. Please sign up for that. So anyways, guys, if this makes sense to you, follow along, subscribe. If you're hearing it and going, I don't 100% understand it, but it doesn't sound crazy.
Go watch another video.
Go watch other videos. Trust me when I say you'll walk away understanding money a lot better at investing. And Mo talks, and that's the thing he does chart reading. We do all these things.
Chart reading, options, deep dives into value. I mean, we talk about mindset, real estate, anything that has to do with investing, we're probably going to cover it.
So subscribe. Thank you very much, guys.